Greetings, everyone, from Cambridge Trust, and welcome to our fourth quarter market update. My name is Jeff Smith, Head of Wealth Management here at Cambridge Trust. Let me start by saying it was wonderful to meet many of you at our most recent client events. We hosted one here in September at 75 State Street on our roof deck. And then most recently, we were in Manchester, New Hampshire for an open house. And just last evening, I met many of you at our Portsmouth, New Hampshire new office. A lot has gone on in the world since we last presented to you in August, namely global unrest and volatility in both the equity and bond markets. Closer to home, we announced a merger between Cambridge Trust Company and Eastern Bank. Today, we will hear from executives from both Cambridge Trust Company and Eastern Bank to share more news on that merger. They will be followed by a market update from our Chief Investment Officer, David Lynch. So without further ado, let me turn the microphone over to Dennis Sheehan, Cambridge Trust Chief Executive Officer. Dennis.
Thank you, Jeff. And Jeff, I totally agree. It was wonderful to see so many clients at our recent events in Boston and also in Portsmouth. Terrific, wonderful for people to come out and sort of post-COVID, it's great to, meet everybody again face to face. And thank you all for coming. And thank you for attending today's quarterly webinar. I'm delighted to welcome Bob Rivers, Chief Executive Officer of Eastern Bank, and Quincy Miller, who's President and Chief Operating Officer of Eastern Bank, who'll be making a few comments in a moment. And also David Lynch, our Chief Investment Officer, who, as is typical, will give us an overview and perspective on the market. And as Jeff said, all of the volatility that we're all seeing and experiencing today. So we have a lot of chiefs on the call today. So hopefully we'll be able to answer your questions later on, and we'd encourage you to ask any questions you wish. Let me start with some background on Eastern Bank and the merger. And first of all, I've known Bob Rivers for many years and have held Bob in very high regard, as I have hold Eastern Bank in very high regard. Eastern Bank has been a community bank that is over 200 years old, is very active in our communities, and is a leading community bank in both Massachusetts and New Hampshire. So what does a community bank mean? Because prior to this merger, Eastern is a community bank, Cambridge Trust is a community bank, and after the merger, we're still going to be a community bank. Well, a community bank means being engaged in our communities. And that manifests itself in a number of ways, whether it's access. And the good news there is we're going to have much more access as a community bank, or you will have much more access to us in our combination with Eastern Bank. It's providing capital in our marketplace. It's engagement and advocacy. And that's what a community bank means to us. And the beauty of this combination is we'll have more capability to bring to our clients, both in wealth management and on the banking side, and more access throughout the marketplace. And we're still small enough to be a community bank that's dedicated to the markets that we work and live in. And so what does this access mean? Well, together with Eastern, we'll have over 100 branch locations in Massachusetts and New Hampshire. And that marketplace in Massachusetts, you think of, it begins in Cape Cod, extends into southeastern Massachusetts, the South Shore, Greater Boston, the North Shore, and into New Hampshire. And we're really delighted that we're going to be doubling our presence in New Hampshire, which is really, really terrific. So it is a significant marketplace. And one of the things I hear from clients is, we work with you in wealth management and we'd love to work with you in the banking side, but you don't have a location near us. Well, you do now. And that is something that I'm very, very excited about. And I particularly am looking forward to visiting with our future colleagues in each of our new locations at Eastern Bank. And I encourage you to do the same thing. Drop in and say hello, and you'll be very welcome. And so how did, before that, beyond branch banking, Eastern has outstanding capability in commercial banking, consumer banking, small business banking, and in technology. As a matter of fact, one of the things that I'm personally most attracted to about our combination in Eastern Bank is the capability in commercial lending. Eastern does a lot of commercial and industrial lending, which is beyond our capability today. So I'm really delighted that we're going to be joining them and bringing that to the marketplace. In small business banking, Eastern Bank is very dedicated to that segment of our marketplace. And as a matter of fact, was just recently ranked #1 in small business banking for the Small Business Administration for the last 15 years, which is really a tremendous record, something that we are not as engaged in small business banking as Eastern is. So it's really, really complimentary, and I'm delighted about that. So how did the merger take place? Well, earlier this year, Eastern Bank decided to sell its insurance business and garnered a very large premium for that sale, and decided to strategically reposition to grow their wealth management and private banking businesses. And that's why Bob Rivers came to call on me as a representative of Cambridge Trust, which is, as you know, a premier wealth management and private banking brand in the marketplace. And our strategy is to bring together these organizations and to grow our wealth management and private banking capability. And at Cambridge, we evaluated the opportunity that this presents to our team, our clients, our shareholders, and our communities. And we felt the combination with Eastern Bank would be in the best interest of all of our stakeholders. So what does this mean for you? Well, the Cambridge Trust team in wealth management will lead the combined company's wealth management business. Your team will largely stay the same. The Cambridge Trust brand will remain for the wealth management business and private banking. And you, of course, will have access to all of the private banking capability and service that you have at Cambridge Trust today. A little known secret is that Eastern has a very successful wealth management capability today and a terrific team led by Bill Walsh. And we look forward to working with the team at Eastern. And we already know from having met with them that we share a mutual commitment to exceptional client service and as fiduciaries to always act in your best interest. In our banking offices, I'm very happy to say that all of the staff are remaining with the bank, and throughout the company, the vast majority of client-facing roles are being retained. A number of Cambridge Trust company management team members will join the combined organization's management team, and I will be the CEO of Eastern Bank. Of note, I mentioned technology, and this is one of the true bright spots. Eastern has much greater capability than we in technology. Now, the Cambridge Trust wealth management clients are not going through a conversion, so I don't want to scare you about that. But Eastern has capability in in their organization that is greater than we. And I've already talked to the team at Eastern about building out a better technology interface for our clients, which is something that I've heard from many of you. And we will, of course, work with you to gain an understanding of what you think the appropriate technology platform should be. And we look to try and deliver that for you in time. Ultimately, this, in my opinion, is a terrific opportunity to partner with a strong organization in Eastern Bank. In today's banking environment, strength and stability are so important. And Bob Quincy and I believe that the combination together is better than each organization individually. Strong in capital, conservatively managed financial institutions, both with very similar cultures, care a lot about the client and the client experience. And we hope that you will feel that as we move through the merger integration. We share a combined commitment to serving clients and communities in Massachusetts, New Hampshire, and Connecticut, powered by the strength of our wealth management and private banking capability, combined with deep roots in commercial and consumer banking, and a deep commitment to advocacy and leadership in our communities. I'd now like to introduce Bob Rivers, Chair and Chief Executive Officer of Eastern Bank. Bob, welcome. You're on mute, Bob.
Thank you. Thanks, Dennis. First, it's great to be with all of you, as it were, as much as one can be through this format. Quincy and I have been spending a lot of time with Jeff and with Dave's teams and getting to know the Cambridge Trust business, not only in wealth management and private banking, but really throughout the company. And Dennis and Jeff, and Dave, and others on Dennis's team have been getting to know us. So it's been an exciting process as we go through it. We've learned a lot. We've met a number of clients and look forward to meeting more, because ultimately we're going to need your help, your support, your guidance on how to do this the best way possible. As Dennis mentioned, this is very much a partnership. Words get thrown around like acquisition and mergers. But this is a partnership in every sense of the word. It really goes back to when we became a public company at Eastern 3 years ago and amassed capital. We were looking for partners so that we could expand our company in partnership with others, make it better, and look for partners that really helped us do that. Cambridge Trust has been number one on our list from the beginning. And it's for a whole bunch of reasons, many of which Dennis said. First of all, the geography is very, very complementary. Cambridge Trust is able to double their presence in New Hampshire. Well, of course, we are too. And that's very exciting for us, that together we'll be twice the size that each of us have been separately, and giving our clients greater capabilities, greater access in that market that Eastern entered in 2014 with an intent to grow. We really improve our access in the Merrimack Valley, which is a market that we entered in 2008 and have looked for ways to increasingly serve in communities like Lowell, Lawrence, Chelmsford, and all other communities in the Merrimack Valley. And then, of course, Cambridge. Cambridge, we've had a small footprint. Together, we're the number 2 bank in Cambridge. And very excited about that. I think as I think about the Cambridge market, I think that's a market that together will make even greater impact. And I look forward to that. As Dennis mentioned, our business lines are complementary. We might be a little bit stronger at Eastern in certain places than Cambridge Trust, but conversely, Cambridge Trust is a lot stronger than we are. And really around the wealth management and private banking business. In some of our early conversations, Dennis and I talked about how important it was to keep the Cambridge Trust brand for a lot of reasons, but really the main reason was for growth. We've had a strong wealth management business for a long time, but it's not as big as Cambridge Trust. And we think operating together under the Cambridge Trust brand will be very, very successful in wealth management, in private banking, certainly in a way that Eastern was not able to be as successful in those businesses. So again, the business line complementary pieces are very, very strong here. Dennis also mentioned technology. Some of our banking technology is better than Cambridge Trust, but Cambridge Trust wealth management systems are just flat out better than ours. And so as we bring these businesses together and look at the timeline, we're not planning to do a systems conversion in wealth. And that would be of our clients, by the way, Eastern clients, not Cambridge Trust, not till the end of next summer. We're going to take our time. We want to do this well. We want to hear from you. We want to hear from our clients and make sure that we bring together the best of both. But we know, as always, these things start with mission, values, and the people that possess those things. That's why the main reason I approached Dennis. Not only do all the things in terms of the classic strategic pieces fit, but from a values perspective and as a person, I knew that Dennis would be an excellent partner on our executive team as our CEO to lead our company into the future. So know that Dennis and Jeff and Dave are going to be continuing to lead the wealth management business. And that's why it's a little bit different. And it is a true partnership. Eastern Bank's leadership will be predominant in the combined banking enterprise. But in the combined wealth management and private banking parts of the business, it will be the Cambridge Trust team that is the leader of those. And again, I think in many ways, that probably in ways you haven't seen with other bank combinations, this is truly a partnership where we're looking to learn and get the best from each other. And we're just very, very excited about it. I mentioned the shared mission and values, and our care about community is deep. It's actually how I first came to know Dennis, was at various community events that he was engaged in as the CEO of Cambridge Trust, as I and Quincy have been for many years as well. And I think about certain areas in which Cambridge Trust has been remarkable. One of them is affordable housing. Very few banks in Massachusetts have as large a commitment to the Mass Housing Partnership as Cambridge Trust, which they did voluntarily in an outsized way. We similarly have a large commitment, and together we'll have over $225 million in commitment to Mass Housing Partnership. That is second only to Bank of America in Massachusetts. So we'll be the fourth largest overall in Greater Boston, but across the state, we'll be number 2, only to one of the biggest banks in the world. That just, I think, is one fact that shows how committed we are to affordable housing. And I really credit Dennis's leadership as a board member of the Mass Housing Partnership for that impetus, his leadership, and combined with our community development lending teams and our combined residential mortgage lending teams, we believe at a time where we need it more than ever, we're going to make a tremendous impact. But in terms of all that we do in philanthropy, volunteerism, and advocacy, we are stronger together yet again. Eastern has a very large foundation and is engaged in these activities, as has Cambridge Trust. Together, we believe that the ability that we will have to make impact in our markets will be far greater than we were able to have before. I will tell you, in markets such as New Hampshire, Merrimack Valley, and Cambridge, I am particularly excited because now we'll have more resources together on our team, our people, all of you, our customers, our community partners, to really show us the way and figure out how we can best invest in our community and make our community stronger. As Dennis said, we're community banks. We're together a community bank. We might be much larger, but a community bank is really a mindset. It's really a spirit, and it's what you do and how you behave. And again, with your help, we're going to be able to continue that on and make a greater impact. And that's very important to us as an organization. As a community bank, we depend on the health and strength of the communities that we serve. And so, again, this is very mutually beneficial partnership that we look forward to engaging in all of you. So with that, I'll turn it over to Quincy.
Great. Thanks, Bob. It's great to be with all of you here today. I just want to take a second before we turn it over to David and get to the meat of today's session to just talk a little bit more about Eastern's wealth management team here. We have over 50 outstanding colleagues who serve Massachusetts and New Hampshire. And I think it's been mentioned by Bob, our wealth management business has been one of the top performing divisions here at Eastern for the 8 years that I've been here and long before that. Dennis talked about community. You've heard Bob talk about community. Our wealth team is fully dedicated to their clients and their families. In fact, I think most of our clients would say that the colleagues that we have here at Eastern Wealth are really part of their family as we look to support them and their financial futures. But they're also fully committed to the communities as colleagues. Our wealth team, they volunteer in the local community. They sit on nonprofit boards, and both from their personal passions and their passion as Eastern Wealth Management colleagues. Another thing I think is really exciting is when we look at the investment philosophies, and I know Bob and Dennis talked about the fact that David and Jeff will be leading the team, but when we look at the philosophies and what we've thought about and how we've invested, it's actually been very similar. So there's so much synergy as we come together and continue to support all of our clients. We are positive that bringing these two teams together, 1 + 1 isn't going to just equal 2 or 3, but we know 1 + 1 can equal 5. What I'd ask is we'd love to continue to hear from you. As we come together, what are the things that you're still looking for? Dennis mentioned some improved front-end technology is something that's already on our list. that we want to look to be able to deliver to all of you as clients. But please share your voice. Let us know. This is all about you and making sure that this transition is as smooth as possible, and that our colleagues are the greater R together are there to be able to deliver for you each and every day. With that, Jeff, I'll turn it back to you to get us started.
Thank you, Quincy. Thank you, Dennis. Thank you, Bob. Now to our market update. Dave Lynch is Cambridge Trust Chief Investment Officer, and Dave has some remarks for everyone. Dave?
Great. Good afternoon, everyone, and I'll invite you again to use the Q&A feature to enter any questions or comments that you'd like us to address at the end on any of the subjects discussed today. Before I get into the markets, I want to echo the comments of my colleagues here that we're very excited to combine the brain power and the ideas of the two investment and wealth management teams. As Quincy said, as the learning process continues, the more I find out about how Eastern operates, I think the way we invest is much more alike than it is different, which bodes very well for ultimate integration and coordination. And in the places where we are different, that's going to be taken positively, absolutely, as an opportunity to freshen up portfolios, bring some new ideas and perspectives in both directions that we think ultimately will make the client portfolios better off. We're better together, we're going to be bigger, we're going to be deeper, and we think that will ultimately flow to client portfolios at the end of the day. So with that said, let's look at a few slides on markets. I just have short 10 slides today, and we'll open it up then for questions. So I'm going to go through where we've been year to date, and then we'll close with where we think we're going for the rest of this year and into 2024. So short summary of this year, the economy has been remarkably resilient. And so in the face of higher rates, things have generally chugged along, with some bumps along the way, but net, it's been a good year for the economy. Good year for the markets as well. Though that market leadership is highly dominated by the Magnificent Seven, those 7 most high-flying stocks being Alphabet, Google, Amazon, Apple, and Meta, Facebook, Microsoft, Nvidia, and Tesla. So they've been by far dominant. But net, overall earnings have been better than initially feared coming into this year, and we're wrapping up Q3 earnings season, which has also gone relatively well. What is helping buoy all of this enthusiasm and price action? Artificial intelligence being one of them, and technology and growth even being viewed to some degree as a safe haven of sorts now, given that these companies are not only doing quite well, they tend to be without a lot of debt, overhang, or other things that is vulnerable to higher interest rates. So there's been multiple reasons flowing assets in this direction. Globally, we maintain our international diversification. Yes, China is down, and that has grabbed appropriate headlines. There's also been some quiet, strong performers on the international scene, Brazil and Japan among them. So we like the diversification and global reach that those holdings allow us. Though bonds had a very happy day yesterday and have been doing better lately, net, long bonds are headed for what is likely to be their second consecutive year of losses, which is a pretty rare occurrence. And for the year to date so far, the barbell of owning T-bills in certain high yield and loan credit sectors has been a positive performer. High quality intermediate bonds are more of a small net positive year to date based on some of the recent rally. But they're set up better for going forward. We'll talk about that later. So all things considered, there's been better news to be sure. Yesterday's happy day where both bonds and stocks rallied does not make a trend, but it was profound enough that at least deserves some comment. There is still a pretty large wall of worry out there, right? We have wars, we have government gridlock, although we brokered a short-term agreement there. Things like student loans, commercial real estate, all those are still there and still to be faced out the horizon. So then moving forward, a couple more pictures of where we are at on page 3. So the global business cycle, as you see here with these dots of the major economies, are clustered in late cycle, if not in recession. So it's not altogether a happy picture, but of course, the market prognostication is about looking across this horizon hopefully having recessions that are shallow and growth slowdowns that are temporary and not more deep or more severe. That's what we're looking at now. And the interest rate picture, of course, is close cousin to all of this, how we get from one side of this oscillation to the next. On to page 4. So the key part of all of this, as typical, is the consumer. And the consumer, I'll focus mostly on the left side of this page. Consumer sentiment has rolled over. It is still fine, but has definitely taken a step back. Now, if the consumer retrenches, we will have some ripple effects and problems on the horizon. Inflation has clearly improved, and that will help the consumer. There's still scars is absolutely left. And on page 5, you'll see, though inflation has improved mathematically, and so these lines aren't going up as fast, and in some cases have backed up, they're not necessarily in negative. And so the price of groceries is not in reverse. It may not be going up here on the right side of the page, as fast or as quickly, this food CPI that we're looking at. But it's still taking up more consumer wallet share than it did a year ago. And so, but consumers can generally tolerate that as long as they have jobs. And so that takes us to page 6. And the Fed's challenge is to slow the job market, slow some of the inflationary pressures that it was bringing us, without putting a lot of people out of work for all these consumer reasons that I just talked about. And so you'll see generally things are going okay so far, as long as we can maintain kind of control of the situation. Wages of the blue line have softened. The gray line, the hiring plans have also softened, but they're still positive. Even jobs that are hard to fill, the green line, have come down. So there's a little less pressure on the labor front. There is a bit of a gap here, subtle, but a gap between those hard to fill jobs and everything else. And so it's not a one-side situation. There are still some companies facing labor challenges, a little bit more uneven, shall we say. So then on to page 7. And just the yield curve here. And so I want to I put this in here to step us back a moment, in that the shaded line, the lighter colored line, is where we started the year. The green where we are now up to this morning's action. And so there's been a lot of volatility around these levels, but net, we are facing higher rates. They have rallied some on optimism based on yesterday's inflation numbers being a bit softer, that the Fed could be done hiking, and that maybe even the peak in rates on things like the 10-year may be in. And that's a good thing, for short-term market trading. But the realities still remain in that if you're trying to refinance a mortgage, those rates are much higher than they were a year ago, or even at the start of this year. If you're a company looking to refinance a maturing loan or a maturing bond, in the corporate sense, you're also, challenged and facing higher rates. So that marginal 25 or 50 basis points of Federal Reserve move is important, symbolizes a lot, but there are still some realities. Credit card APRs and things like that are still high and higher. So it's not universally good news, even though the marginal trading has been better lately. On to page 8. Oh, and I included this slide just as a reminder that it's not just consumers and corporations that get pinched by these higher rates. It's the U.S. government itself. And so the debt service costs of corporations have gone up, but they're also going up for the federal government. And that gives us less wiggle room as far as even our credit rating, with Moody's commenting negatively recently, and Fitch prior to that, about U.S. Treasuries and the U.S. outlook. And there's a degree of crowding out that can happen. The government has to issue a lot more debt and, in a sense, compete with corporate issuers to attract some of that same capital. And this is likely to continue. So you see the 10-year has increased. So as the government has to refinance more and more, a lot of that is done in the very short end. But further out, will face net higher interest costs. So on to page 9. So as we just wrap it up here, what we have is the conundrum, and that stocks and bonds are speaking somewhat different languages here in the short term. And how can we reconcile that in the so-called soft landing, that higher rates can be absorbed, inflation can come down gently without disrupting the earnings picture and the stock outlook, unduly. What this graph is showing is the black line of the PE ratio of US stocks based on the MSCI index in this case. Find similar if you were referencing an S&P version of US equities. Investors are willing to pay and maintain a pretty high premium, pretty high PE, price to earnings ratio for investing in stocks and maintaining stock holdings. And that is in the face of higher real yields. That right axis here is inverted. So the falling blue line is actually rates, real rates. So this is nominal yields net of inflation, being more stringent, more confining. Typically, the stocks move in relative lockstep, good or bad, with this ratio and do not deviate for long stretches of time, though that has been persisting up to this point. That will be the challenge of 2024 is how we kind of reconcile this picture. So that brings us to a summary then on page 10 on the road ahead. As far as the road ahead, just a quick note in front of me here. So the soft landing remains in play. That needs to be acknowledged. But I would mention that an analogy that I've been using and thinking about is that think about flying in an airplane, in that most landings look soft and smooth on the way in. And it's till those wheels hit the ground where you really know if the pilot has done it well, or if there's going to be a jarring bounce, and if not worse, as far as the landing goes. And so, we're coming in looking good so far. But I think because of the long and variable lags of interest rates, there's still, a little bit more that we want to be careful about not taking it for granted, and that this so-called pillow soft landing may not be achievable. There is a slowdown forecast. Even the bulls among us are forecasting a degree of further GDP slowing in 2024, but it's a matter of degree and how it can be contained. On equities and earnings outlook, earnings may have bottomed, and so there has been a degree of earnings recession that has gone on, and sort of recalibration that has gone on under the surface, and cleaned up some of this. I think some of the challenge around highly indebted companies, smaller cap companies, without as much sort of critical backbone as a lot of the US large caps that are predominant in our portfolios, they could still face challenges. So I think there could be headlines coming out, ideally not in the things that we own, but around the edges, as there's more of this reckoning to go through. That's why we like quality stocks, quality US stocks, now more important than ever, primarily because of that low indebtedness, among other, positive factors. So the outlook, even for earnings next year, earnings growth is forecast to be up about, for the market as a whole, roughly 12% next year, which is pretty healthy, but we don't want to take that totally at face value. We look at that with a degree of skepticism. I mean, things could still be positive, but maybe not quite that positive. And so that's where there's opportunity, we think, for active security selection, active dissection of all that by our team. We're talking here today about the market as a whole, but we're pulling that apart into individual stocks, individual names, individual themes for ultimately how we express our positions. Within bonds, it has to be said that high quality bonds are not bulletproof, and price action of recent years has shown that. And there hasn't been capital losses in terms of held to maturity securities for client portfolios, but the price action along the way has been challenged, of course. But bonds are certainly more reliable, again, from this starting point, and from these yields forward, these dynamics forward, they are, again, viable contributors and diversifiers to portfolios. And that's a helpful and welcome sort of return to the scene of bonds as an available outlet for portfolio cash. Income sensitive portfolios are also afforded a greater opportunity to be able to meet their income targets with potentially less volatility now that things can be earned in the bond market that formerly were more reliant on capital appreciation of equities or otherwise can dial things more into a bond centric way for a little more certainty. So overall, to wrap up, our portfolio positioning so far is no major change to our headline weightings. We have a moderate underweight to equities and conversely slight overweight to cash. And we are neutral in terms of fixed income positions, maintaining our core US equity holdings for the long haul. And so we're looking through the cycle, tolerating some volatility along positions that we think are great long-term compounders. We're managing position sizes and risk along the way, of course. Geographically, we're balanced. I alluded to global equities earlier. We remain in high quality bonds, including mortgage-backed securities, and we're cautious and patient as far as when we might invest more robustly in credit spreads. We have some of that, but we think there's better opportunities ahead. We'll be patient for those. We have small allocation alternatives for some of your portfolios with a call writing fund that generates some additional income. We have invested in commodities in the past, though don't believe that the time is right for that now, but we're monitoring that closely and will be as we head into 2024. And so my final slide is while we're waiting for this sort of next evolution of the market, remember that your Cambridge Trust relationship is more than just the market. We love talking about the markets. I love talking about it. My colleagues love talking about it. But really, your portfolio and your relationship with us is far broader than that. I invite you to consult your Cambridge Trust team. Use this time of year to update and clarify your plan, your goals, et cetera, for individuals and families. That's finding your estate alpha and your peace of mind by getting your estate in order and being savvy about taxes and asset location and related. And the institutional equivalent of that estate alpha is more around keeping your investment policy up to date, cash and liquidity needs articulated and understood by your portfolio manager, et cetera. So as we come in to the end of 2023, let's follow through on tax planning, gifting, distributions, et cetera, that need to be done by the end of the year, and then get set up for a great 2024 and going forward. So with that said, say thank you and happy holidays to everyone. And I think we can turn it back to you, Jeff, and open up for questions.
Great. Thank you very much, Dave. I appreciate it. We did have some questions, and I'll encourage folks on the line if you want to enter any more questions into the Q&A. But we'll let Dave breathe for a second because most of the questions came across on the investment side. Bob, I think I'll throw this one your way if you don't mind. Both you and Dennis commented on our commitment to communities. And maybe you can just expand upon the Eastern Foundation and your total commitment to the communities in which we sort of live and work.
Sure, happy to, Dennis. Again, the roots of our community engagement activities go right back to our very beginning. Eastern was the third mutual bank established in the United States at a time where in 1818 there was no national banking system, no national currency, and almost no one had access to a bank other than the very wealthy. And so when we started in Salem in a one-branch bank, it was formed by people in the business community, attorneys, doctors, merchants, ship merchants, and so forth, that did have access to merchant banks, but felt that it was a real disservice to the community that they didn't have a safe place to save or borrow money. Until that point, people literally stuffed their money in a mattress or hid it on their property or hid it in a tree or some other place, and inevitably it was lost, stolen, destroyed in some way. So this is a way to sort of unlock the capital within the community, give people a way to borrow money as well as deposit money. And our very founders were the first volunteers. So when we opened up on noon to 1 on a Wednesday on April 15th, 1818, it was those founders that staffed the organization and offered a 5% passbook to the community, the early precursor to a mortgage loan. And the compact with the community was, if you come and take advantage of these services, you need to volunteer. so we can expand the hours. So our first customers were our first employees, and in fact, we're all volunteers in service of each other. We were also one of the very first banks in the country at the time to permit women to have bank accounts. Again, it's 1818, 100 years before women had the right to vote in the United States. They weren't allowed to engage in business transactions. So when we opened up, we offered business account, deposit accounts to women. And not surprisingly, over 80% of our initial depositors were women. You know, that ethos is carried forward to today, where our foundation is about $250 million in assets. We support over 1,600 nonprofits every year. We've been the top 5 or easily 10 charitable contributor among companies here in Massachusetts. So a lot of these things are very important to us, and we've leaned into it. In recent years, the focus of our foundation has been on issues of economic inclusion and mobility, around scaling less represented entrepreneurs and business owners and scaling their business here in Greater Boston and New Hampshire. It's been focused on issues of early childhood education, and we stood up the Mass Business Coalition for Early Childhood and began doing it actually before the pandemic, when many folks afterwards realized how important our early childcare system is. We're doing work in terms of adult workforce development around recertification, ESL training, and of course, one that's very fits with our business is safe and affordable housing, as I mentioned earlier. So those 4 pillars are the focus, but not exclusionary. The organizations we support, the issues that we advocate for are broad and growing, and so many of those are brought to us, inform our thinking from our customers and our community partners. We're interested in what you care about, because ultimately that's what we're going to care about and work with you. We do the same thing with our employees. You know, so many of our employees are involved in volunteer activities, and as new employees join the company, we ask them again, what are you involved with? What do you care about? Where can we help support you in your activities? We'll ask the same of you. And again, very consistent with things that Cambridge Trust has done over the years, but now together we have more resources to do them. Again, the size in of itself isn't all that important. It's really having the capacity and the bandwidth and the talent and the resources to do things at a bigger level on behalf of the communities we serve, and that's what we're intending to do.
Great. Thank you very much, Bob. Dennis, if you don't mind, I have a question. Last time we got together, we talked about the integration of private banking and wealth management. And do you mind just putting a quick plug in for our friends in private banking?
Sure. In terms of, what do you mean in terms of a plugin, in terms of how the integration is going? Is that the question,
Who's
Jeff?
going to lead that group, and how's that going to work?
Oh, sure. So Kerry Mooney, who's a member of the Cambridge Trust management team, who is our chief deposit officer, leads all of our banking offices, will lead the integrated private banking capability at Eastern Bank, something we're very excited about. You know, Eastern has a private banking capability today. It is smaller than Cambridge's, and we think there's a lot of opportunity and potential for Kerry and the team to build out that service model across the combined organization.
That's great. Thank you. And Dave, we're going to come back to you with a couple of questions. In your notes, you talked about artificial intelligence, and I know that's a loaded question, and we could probably fill up a lot of time, but can you maybe just hit the treetops on how we're thinking about AI?
Sure. We think it's real as a phenomenon. Of course, the question is, how is it monetized profitably from an investor's perspective, shareholder's perspective, or bondholder for that matter? So we own many of the high flyers who have been appropriately rewarded for the breakthroughs that they've had in AI. We expect to continue to own many of those, but we're looking for that next layer of opportunity, the one step removed. In other words, for these large companies that have already been recognized for AI prowess, for them to succeed, their customers and their ecosystem has to also be successful in sort of this proof of concept and ability to monetize. And so we're looking to find those sort of the undiscovered beneficiaries of AI, and that's where our equity and bond research teams are hard at work. So we think it's real. The question of monetization remains, as it has with sort of all internet type phenomenons. It takes some time to figure out exactly how it's going to be utilized. So, you know, we're doing a lot of research there, and we're looking for the sort of the undiscovered components of those ecosystems next.
Great. And another question came through our Q&A just about our municipal bond management capabilities. So can you just touch on that side of things?
Yes, so that's something that we're very proud of. We have our bond team internally manages muni bond portfolios custom to clients by state of residence and related maturity ladders and so forth to match liquidity needs. And ultimately as well, trade execution comes off our bond desk. So we are able to find the appropriate pieces of bond paper for portfolios. We're able to block trade, et cetera, to get best execution. We expect to be bringing some of that to Eastern Bank as well. I know they do a lot of their own bond trading, although perhaps in early studies, you know, maybe we can do a little bit more on the muni side through what we are already doing and just ramping that up and trading even potentially bigger block sizes and related to everyone's benefit. So no change to that. In fact, probably even some increase of our muni usage.
Great, thank you.
And Jeff, just along that question, there was another sort of part to that I thought I could add to, is this question around in-house management of portfolios. And we absolutely expect to continue to do that. I think there's a question about Eastern's outsource. Probably the difference of the models that we do today is we import research. We don't import models. So we bring in research, but then create all of our own models from the research, and Cambridge Trust today creates their own research. So we are going to be going to that model, but going to that way of collecting and doing research, but how we actually manage the models, both are very active and have been very successful. If you look at the returns over the last 1, 3, 5, 10 years, and you compare that to active managers across the industry, we clearly punch above our weight in both organizations, and expect that we'll continue, like I said in the beginning, to keep those investment philosophies aligned with what our clients are looking for.
Fantastic. I think that ends the list of Q&A that I had. Anything that Dennis, Bob, Quincy, or Dave would like to add before we sign off?
The only thing I'd add, Jeff, is I was psyched that T. Taggart was on the call. I've heard about her forever. I sent her a note. I said, I'd like to meet you. I mean, she's an icon. I mean, in the nonprofit world, the investment world. I mean, that was cool.
Thank you. That's great to hear. So
Jeff, I just thank you everybody for joining us today. As you have any questions moving forward pertaining to the merger, please reach out to your relationship manager or to me directly. It's important to us that we hear your feedback and look forward to speaking to you in the future. Thank you very much. And happy holidays.
Great. I'll add my thank you as well. Happy Thanksgiving to everybody. Enjoy the holidays. We'll be back together probably in January or February for our Q1 update. Thank you for your time today.
Thanks, everyone.
Thanks, everyone.